Okay. Um, this is the continuation video of our classes, and this is the fifth recording for understanding the market business model. And so far, we've been discussing a whole lot of things, and I think this was where we stopped yesterday. Okay, so we're gonna pick up from where we stopped. But before that, let's have a quick recap of what we discussed yesterday. So yesterday, I spoke to us about the business aspect of the market. And I told us that it's this business that makes the market in itself to function, and this business is what we call market action. Okay, and without the business, the market would not function. And I went ahead to use different examples. Okay, if you missed that, you might just check the previous video. That would be MBM 004, so that you can get updated. And whatever we'll be speaking or discussing about in this class would not be strange to you. And let me just remove this. Now, in today's class, we'll be speaking about instruments. Okay, what are instruments? How do they function? What's their business in this market? How are they related to this market? Now, the interesting part is that the instruments teaching would not be very elaborate because there's not much to talk about it. Because if we decide to talk about it, it means we'll be speaking about each instrument. So we'll be speaking in generic term here. I'll be teaching you the generic understanding of instruments that can be applied specifically also. Okay, so it's a bit like I'm telling you that this is what happens to everything. So you can actually use it on each of them. Okay, now you see, for you to function as an analyst, you need to understand beyond what you are in. You must understand the things that makes that thing that you are inside to function. If you are a barber, let's say a barber now, somebody who barbs hair, you would need some tools to help you successfully, barb people hair. If you are a plumber, there are some equipment that you would need that will help you to do very good plumbing works rather. Whatever it is that you do, whatever business that you decide to go into or venture into as a person, you need some things for that business to function. In fact, from the kind of things, tools, devices, apparatus, instruments that you have in your business, we can literally we can guess and be correct about what kind of business you do. So when you see someone with a stethoscope in a white apparel holding a thermometer, you can guess that this person is a doctor, okay, working in the health sector. So what's the business of that person? This business is with health. And what market is that person in? The health market. When you see someone holding a screwdriver, a hammer, wearing an helmet with a boot, and having a tool pack on his belt side, we can guess that this person is probably an engineer. So with the instruments that these people use to work, we can guess without them telling us what kind of job that they do or what kind of business they are into. So instruments are the tools that people use for the, for the delivery of their job, or we can say instruments are the apparatus, the things that a business needs for them to function. In a settings whereby in an industrial settings, the machines are the instrument that helps the industry to function. I remember when I was still working, in the text, is it textile now? No, not textile, but the shoe and footwear industry. Back then, I think that was some years back. That should be up to 10 years now, 10 if not 12 years. I was working in a company where we make shoes, we make footwears. Okay. Now there are machines in that company, in that factory, that all you just need to do is put some ingredients and measure those ingredients, put it, and then let the machine do its work. And then the machine will now bring out the footwear, and then you do the rest. So without the machine, we cannot know what exactly we can, the industry, the factory cannot function. So the machine is very, very important. Now the thing is that the machines that you need to do certain things are different from the machines you will need to do other things. If, let's say, you are producing food, the machine you would need for the product processing and production of food will be different from the machine that you will need for the sealing of those canned food. Let's imagine it is a canned food. It's a canned food industry, yeah. So the machine that would process is different from the machine that will seal. The machine that will seal is different from the machine that will package. The machine that will package is different from the one that will arrange. And a whole lot of things like that. And that is just in the section of, and this is just for in a factory, in one single factory. In a factory that produce edible food. Now, in a factory that produce, so if we say there is a factory that produces detergent, the machine that would be needed, okay, that would be needed for the production of that soap would not, it would definitely be different from the machine that will be needed, that is being used in the factory that they produce food. So depending on what is to be produced, that is what would require the kind of instruments that will be used. And this thing is not different from the markets that we are in. As a trader, if you don't know the instruments that you are trading, the instruments that you are using, you are going to fail. Because you are here to focus on the business, aside the business part of the market. And a business cannot function without its instruments. Let's imagine this is a country. What are the instruments that makes a country to function? This is where, what are the things that makes a country to function? This is where your understanding of this instrument comes into play. If you don't understand the instrument that makes this box, this country, to function, I'm representing a country as this box now. If you don't understand the instrument that makes it to function, you will never be able to make profitable decisions. By the time we go into the screen, into analyzing properly, and I start, analyzing live, you guys will see me call price direction with precision. And sometimes I won't even need to analyze. Why? Because I understand the instrument that I am trading. As a trader, if you don't understand the instrument you're trading, you're already set for failure. It is beyond calling it a pair. No, it is not just a pair. because it is EUR USD. What do you know about EUR? What do you know about USD? So in this example, I'll be using, let me use EUR. Let me use AUD for this example. Now, I'm going to shrink it this way. Now, this is AUD, a currency. Now, before I talk about AUD, let me finish my explanation of instruments. So instruments are things that makes a business to function. So the same way this market cannot function without business, a business cannot function without instruments. Instruments, you can call them assets also. You can call them assets because to the business, their instrument that makes them function are their assets. Without them, they can't do anything. Without the instrument, the business can't do anything. That's why even in any settings in the world, whatever wants to happen in the world, there must be something. So let's imagine there are two people who wants to make transaction. One have the money, the other person has the product. You see, the one who have the money, that money is the instrument. Without that money, this person cannot perform business. You get what I'm saying now? And to the person who has the phone, that phone is the instrument of transaction. Without that phone, without that phone, the person cannot perform anything. He cannot do business. He can't do anything. So the instruments are very, very important in understanding business. Because by the time you understand the instrument, you can now know the kind of business that is being done. Very good example. Now, before I go to very good example, I'll have to introduce us to the fact that in this market, the instruments that we focus on in the foreign exchange, the currency market is currencies. So the instruments we trade are currencies. And these instruments, let me put it this way, these instruments are what cause the business to move. So we can literally call it, the business action. Hold on. Business action. Yeah, the business action. Okay, so I'm just gonna make it long that way. Yeah. Okay. So as the business makes the market to perform, okay, business causes the market's action. So without the business, the market cannot function. The same thing for instruments. It is the instrument that makes the business to function. Without the instrument, there is no business action. Okay? So it is the instrument that determines the business. What do you have? I have yam. What do you have to exchange for yam? Potato. So we can literally say the kind of business these people are doing is an exchange, or we can call it trading by barter. When somebody say, "Oh, we want you to," and what we have here is, some stocks, and in exchange of these stocks, we have stocks. And they're telling you that what we have is stocks. What do you have? And you're telling them what I have is, let's say, shares. So you guys are in the stock market. So it's the instrument that determines the kind of market and the kind of business, rather. That's why in the forex market, or in the money market itself, talking about the cryptocurrency instruments are different from the currencies instrument. They work differently. That's why you see crypto opens 24/7, but the currency market, the forex currency market, does not open 24/7, it opens 24/5. The way stocks behave is different from the way indices behaves. The way indices behaves are different from the way futures behaves. They have different behavior. Why? Because they are different instruments. Some instruments moves when in London, some don't move in London. Some instruments do, they deliver up to thousands of pips per day. Some don't do that. So imagine you don't even know the instrument you are trading, and then you are just trading it haphazardly. You're gonna lose. Let's say you have a washing machine. There are some washing machines that can take 5 kg, some 15 kg, some 8.5 kg. Now, in case you don't know the kg, you're just gonna, let's say you have a 5 kg instrument, you have a 5 kg washing machine, and you are overloading it with something that is more than 5 kg, let's say 20 kg, you're gonna keep on not getting results from that washing machine. Okay, and let's imagine you have a washing machine that's worth 50 kg, and what you are giving it is just 5 kg. That means you are minus 10x short. Something that's supposed to be generating massive, productivity, and you can wash a whole lot of clothes, you're just washing something small. It's like you have a solar system that can power everything in your house, but you don't know. You don't know. So you are shorting yourself because you don't understand what you have. The beyond you just trading instruments, it is understanding those instruments. So what makes this business, what makes the business, in fact, what makes this market and this business to function are the instruments. But you must understand the instrument if you want to be a profitable trader. And this is why when you see traders who have 100 or 50 or more than 10 instruments on their chart, what do they know about those instruments? It's beyond just putting it on your watch list. Do you understand them? Do you know how they function? Do you know how they operate? Because when you understand them, then you can understand how you can know how to efficiently engage them for maximum productivity. There's a lot to speak about this instrument. Because without the instrument that we trade, there is nothing to trade in the first place. Without the instrument, there's even nothing to trade. So you see how everything works together. Without the instrument, business market cannot function. Without business, we can't even see an instrument. Without business and instrument, there's nothing like market. Everything works together. You remove one, you fail. You fail. This is why when you go deep into, when you start trading the market business model, you will see that you trade only one pair. Don't worry, we'll go deeper. Yes, there are some teachings in the market business model that permit you to trade multiple pairs. When we get to that portion, we'll talk about, in fact, we are not here to talk about how many pairs you should trade. We are talking about instruments. So in this market, the instruments we trade are currency pairs. We call them pairs. Or we trade currencies. That is our business. So the business of this market requires that they have an instrument for this business to function. And this instrument must be understood by traders if they want to be successful. So if you decide to trade AUD USD, you must understand the instrument in itself. You must understand AUD and you must understand USD. Why? Because they are both different instruments. Yes, at the end of the day, they are both a pair, which I will teach us how to, understand both of them. You get both. I'm just helping us understand the basic understanding from scratch. AUD is an instrument, USD is an instrument. Two different currencies, two different instruments. They now pair them together. They now call them AUD, USD. This becomes the base currency, the quote currency. Now, this is where understanding base and quote now comes into place. Why do we call it base? Why do we call it quote? Now, in a business setting, let's imagine you have a business that you are running. Let's imagine you have a restaurant. Of course, you have to cook meal, yes? Now, everything that you use to prepare the meal, they have their own function. The pot, the function of the pot is different from the function of the spoon. The function of the spoon is different from the function of the spatula. And when we categorize them, we can say there are some utensils that are for scooping, some are for cutting, some are for dicing, some are for frying, some are for deep boiling, some are for deep frying, some are for roasting, some are for baking. They have their own function. The same thing in this market. There are some currencies that are, when you understand them, you know that this particular currency, this is its function. This is how it operates. This one does not operate like this. This one works best during this period. This one, when you see it do like this, it means like this, it means like that. That way you can trade this currency from understanding of the currency, not just what market is showing you, not just what the chart is showing you. As traders, we don't trade charts. We are not we are not analyzing chart. We are not chart analysts. We are price analysts. We are instrument analysts. We are business analysts. We are market analysts. It's beyond the chart. That's what I'm trying to tell you. We are not confined to those candlesticks or whatever. Everything we do is coming from a knowledge that is beyond graphical representation of data, because that's what candlesticks are. That's what a chart is. A chart is just graphical representation of data. We are not trading graphics here. We are not graphics trader. We trade fundamentals, understanding the basics, the reason, the source. That's what we are trading. That's why when you understand AUD very well, you cannot open your charts for the whole of the day, and then by 5 p.m. in the evening on a Thursday, you can literally come and place a trade without even knowing what is happening in the chart, and you will still make money. Yes, we are going to try this thing out. Trust me, guys, we will try this. You will make money. I know what I'm saying. Your job is to listen and follow. These are the things I use to make money in this market. Sounds impossible, sounds very rare, sounds like something you've not had before, and then you're doubting it. Trust me, don't doubt it. It works. I know what I'm saying. So believe and listen. It's simple. So this instrument, this currency, the instrument we are focusing on now is the currency. So this currency is very important you understand them. Now, how do you understand a currency? Not to even talk about the currency pair yet. How do you understand a currency? You go back to the business. Yesterday class, I told you, the business is based on the country. Okay? Now, if you are going to understand AUD, you must understand the country that AUD is being used, because AUD, which is Australian dollar, is the legal tender, is the currency of Australia. So you must understand Australia. Now, we know Australia are very heavy on on oil. That's their, what's it called now? That's their natural resources, oil. Okay. Okay, sorry, hold on. I think I'm mistaking Australia for Canada. Yeah, Canada is for oil. Australia are known for coal, iron ore, lead, diamond, and all those kind of things, but they have their natural resources, yeah? Now, you must understand Australia. When you understand the Australia rather, then you can understand their instrument. It's like saying for you to understand, you know, some tools, you must understand what business are using those tools for, so that you don't go and use it haphazardly. But then we don't need to go and study the whole of Australia. That's why you are in class in the market business model. I will help you understand everything. We don't need to go and start studying Australia. I'm just helping us build understanding of fundamentals. So Australian dollar is the instrument of Australia. I don't need to tell us what this means. This means that United States dollar is the instrument for the United States of America. Now, when you understand how these instruments function, then you can trade them effectively. Then you can engage them effectively, because now you are sync with the business. You are in sync with its market. Now, what are instruments used for? Now, the Australian dollar is an instrument. It is not a product. Remember, I did not call it a product. So it is not limited to just buying and selling. It has a lot of function. The Australian might decide to use their currency as hedge against inflation. They might decide to use their currency as, what's it called now, for whatever policies they want to do. They might decide to change their policy, their currency. It's their instrument. They might decide at a point the instrument might have faults. What you see in front of the screen as buying and selling is not because of AUD. People are buying AUD or USD, or people are selling. Yes, that's actually what is happening. But the reason why those things are happening is because of there's a way the AUD USD is being done. Okay? It's an instrument after all. So there is something the Australian government, which is their business. So based on the business of the Australian government, there is something they are doing with the instrument, the Australian dollar, and it's reflecting on the chart as buying or selling. Now, can we know what they are doing? Yes. And how do we do that? Through their interest rates, through inflation data, CPI, all those things. But we don't need those ones, because remember I told us that the market business model helps us to encode fundamentals into technical. So you don't need to now that you understand that the way these things function is through interest rates, CPI, consumers, producers, inflation data, deflation data, a whole lot of things, monetary policies, GDP, CCQ, data balance, commitment of traders. All these things are what makes you to understand this instrument fundamentally. Yeah? But you don't need to now start having all these things and stressing yourself. There is a way the market business model has encoded them into technicality for you. So now you don't need to check commitment of trader before you know that AUD USD should be buying. You don't need to know to start pursuing after interest rate before you know that AUD is bullish or bearish. You don't need to do some things before you know that volume is coming into AUD. You can, with technicalities, as taught by the market business model, you can understand the fundamental narrative, the underlying fundamental narrative of AUD, and definitely know what is going to happen next. That's what understanding instruments is. Now, what is base? What is quote? Now, the first currency in a currency pair is the base currency. The second currency is the quote currency, which means that it literally is telling you that you are exchanging. Remember, now we are back to explaining foreign exchange, the market. So you are exchanging AUD USD for USD. I'm sorry, AUD, which is Australian dollar, for the United States dollar. Now, whenever you want to convert AUD to USD, and whenever you want to convert your AUD, yeah, to USD, yeah, you are bidding. So you have the currency. The word for it is B. Let me type. Oh, I don't think that can be typed, so I'm just gonna put it there. Hold on. Now, what you have is AUD, Australian dollar. Okay? And you want to sell it off to buy a United States dollar. So what you're doing is you are bidding. Okay? And then if you wish to buy, let's say, United States dollars, okay? Remember, here you have AUD USD. You want to sell it to, you have AUD rather, you want to sell it so that you can collect USD. What you do is you bid. Okay, you bid. And then if you have AUD USD. Now, okay, so here you have AUD USD, you want to sell it to USD. I'm sorry, you have Australian dollar AUD, you want to sell it to USD. You are bidding. Okay. Now, if you have AUD, if you have what's it called? This same AUD, you are still the one that have, AUD here, and you want to buy USD with it, you are asking. So you have AUD and you want to sell it so that you can get USD. Okay? So what you do is you bid. That money, the AUD USD goes to the USD. The AUD goes to, I don't know why I'm calling AUD USD, my apology. Now the AUD goes to the USD side, the USD comes to your side, to the AUD side. Okay? Now, the funny thing is that when it comes to price, you see, I did not mention price. When we come to price, we'll speak a lot about it, but this is literally just a simple explanation. Now, when we come to price, we'll be looking at it from the, broker aspect, because you are not the one that is actually, you are placing orders, but you are not the one that is putting price on it. It is your platform, where maybe your broker that is putting those price, and this is where auctioning now comes into play. All you are doing is you are auctioning. So I will speak about that when we come to price. This is just how it works. When you have AUD USD and you need USD, when you have AUD and you need USD, what happens is that you bid. Okay, you want to let go of your AUD. You want to sell it off. You bid. Now, if you want to buy USD, okay, you are asking. Okay, you are asking. Now, the interesting thing in this is that you might have AUD and you just bid it for USD. Okay, so what you have literally done is that you have let go of your AUD and you have collected USD. So what you are doing is you are selling your AUD. So there must be somebody who have USD to sell to you. And once both of you meet, you transact. Now, in the case of you needing USD and you want to buy, you might not necessarily have to sell your AUD because you are actually buying, you are not selling. Okay, so you are asking. Okay, so when you are asking, It means that you need this. It is a demand. It is a demand. You want it to come to your side. It doesn't necessarily mean that you are giving this. Now, if the person who would be transacting with you now is requesting AUD in exchange for USD, that's a different thing entirely. That's a different thing entirely. That's why base currencies would usually change, while your quote currency will most times remain the same. Because quote currency must be currencies that are in large demand. That's why you see majority of the pairs in the market that are quoted. The quoted currencies are currencies that have massive liquidity, usually in demand. So if you need USD and there are a lot of people and you have AUD, but you don't want your AUD, you don't want to sell your AUD. All you need is something else that can be converted to what? To USD. It could be GBP, EUR, NU, and this is where correlation now comes into play. You have to understand the instrument though. I think this instrument class is even going to be very long because now I'm going into correlation and I didn't even think I want to speak about it. It is asking, the act of asking, that makes correlation possible. Bidding is you having a currency that you want to sell off so that you can get the other currency. That's a transaction, exchange. Asking is you needing a currency. So for you to collect this currency, you must have something else. And that could be another currency or something else or commodity or whatever. But the point is that you need this. If AUD is all you have, you must give AUD to get USD. If you have AUD, but you don't want to use AUD, but then you have some EUR, but you needed USD, what do? You convert, you sell, you use your EUR to get USD. That's the interesting thing about asking. And by the time we go into price, I would explain to you how your brokers operate, how they use asking price, to transact with you that you don't know. Now, every quote currency must be a currency that is in massive request, liquidity. It must be a liquid market. It must be something that is easily accessible, something that is generally acceptable. And USD is one. EUR is another one. JPY, Japanese yuan is one. But we'll be focusing on USD because it's the most liquid. USD. Now, based on the explanation of asking that I just told you now, that asking means there is a demand from your side, from the base side. This is base, this is quote. Okay, so the base person, the base current, the base, you the person, you the trader, you need USD. Okay, USD is the currency. You need it. Okay, and all you have is AUD USD, so you can actually convert it. All you have is AUD, so you can actually convert it. You have you sell your AUD and you give your AUD and you get your USD. While some other people, instead of that AUD that you have, they would have NZD. NZD can still be converted for USD. Other people will have GBP. Some people will have EUR. These four currencies, I'm going to stop here. These four currencies can be exchanged for USD. So if you have AUD, but you don't, and you have NZD, and you have GBP, but you feel like using NZD to convert it to USD, and you feel like using NZD to get USD, all you need to do is ask with that pair. Now, some people don't have AUD, but they have NZD. Some don't have NZD, but they have GBP. Some don't have GBP, but they have EUR. All these things are the business. Okay. Now, all these things, they can be used to get USD. So let's say EUR is getting USD, GBP is getting USD, NZD is getting AUD. What happens there? There becomes a correlation in the price action of these pairs start happening. Why? Because you can be using AUD to buy USD, NZD to get USD, GBP. These four pairs are this, at the same time you can use all of them, and at the same time you might not decide not to use all of them to get USD. So their price action. This is why you see some certain pairs price action are similar. That's why when you see AUD NZD, it will be negatively correlated to AUD USD. Why? Because you are actually using AUD to get USD. You are using NZD to get USD also. You get? So AUD would be, let's say AUD is, you are dropping it, you are dropping NZD to, which means it will be selling. Now there will now be conflict between both of them. And that's why when you go to AUD NZD, you see that it just moves in such a way that sometimes it's buying, sometimes it's selling. So correlation is not used. Now, unfortunately, majority of you have been, taught to use correlation as, basis for analysis. No, correlation is not used as basis for analysis. Correlation is used as basis for trading, not analyzing. Oh, they will tell you AUD, they will tell you EUR USD is negatively correlated to so pair. It's a lie, bro. Those things are just patterns. Yes, on your screen it is, but that's not what it is used for. Some things looks like this is it, but the function, how it should be used, is different from how we use them sometimes. Many times, and this is the bedrock for the market business model. When I started, I said, you must know what this one is used for so that you can get the results that you desire. That was what we used as introduction to MBM. I hope you guys understand everything I've explained. For the case of bidding, when you are bidding for a currency, it means you are willing to let go of the one that you have and get a different currency. So this one must go. But in the case of asking, when you're asking, you might not necessarily let go of this one. And that's what causes, and correlation and all those things. So you have AUD USD, another person has NZD, another person has GBP, another person has EUR, and they can convert, or they can use all these stiff pairs to get the same currency. It creates correlation. It creates correlation. Now, I'm not talking about people, I'm talking about banks. I'm not limiting it to people. Banks, as long as it is a transaction, remember. So I'm not saying there is an algorithm somewhere or a bank somewhere or wherever who controls. I don't care who controls. We don't care who controls the market. The point is that it is a business of somebody to convert AUD, to ask with AUD, to ask for USD with AUD. It is another person's business to ask NZD with US. It is another business. You get what I'm saying? So our focus is their business, not. So understanding this instrument helps you to build strength and this is why, remember I told you, instrument cause the business action, and the business action, what happens to the market action. So let's explain that. Instrument is AUD USD. You convert, you are bidding, you are asking. When you are bidding, okay, let's start from bidding. So you are bidding, which means you are selling AUD to get USD. So AUD on the, so your business, the business of AUD right now, based on the country, or whatever is the sole reason for AUD movement, is that it wants to bid AUD, wants to sell off, and you start seeing AUD sell. And but the moment it starts selling, there begin to be supply. Remember, supply, this is what supply now means. So AUD is being supplied to get USD. Okay, so it happens in the business. Now, the moment AUD is being supplied to get USD, what happened? AUD starts selling. And by the time it starts selling, that's what you people now still seeing in front of the screen as market action. Oh, AUD is selling, AUD is selling. And this is why sometimes AUD will be selling, EUR will be selling. Because at that point, EUR can also be used to, the same EUR can be exchanged for USD. So you are asking, they are bidding EUR to USD, selling it off. All these pairs, you can sell them off to get USD. So they start selling. In the case of buying, it is asking. So you see AUD being sold to get USD. NZD the same thing, GBP, EUR the same. So there is correlation. Now there are some times that there will not be correlation between this pair, and that is when you see AUD USD buying, EUR USD selling. Now what caused those kind of things? Still the same bidding and asking. Remember, the act of bidding, I wanted to explain it yesterday, but I did not explain it. Yes, yeah, I said we should move it to price. So the act of bidding is a business. It is an action. It is a business. The act of asking is also a business. So once AUD is being AUD USD, there is an asking for USD, yeah, and Euro is not asking for USD yet. Maybe for whatsoever reason, yeah, it might still be bidding. Okay, you now see disparities. That's when you see there is no correlation between these pairs. Now, this is why when we go deeper into the market business model, you see that there is nothing like consolidation in price. There is nothing like, what did I say? Consolidation in price. You see, I've not mentioned anything consolidation or trend. There's nothing like trend in price. There's nothing like consolidation. There is none. There is nothing like candlesticks in price. All these things are just used as grouping of analysis. We are talking about MBM focus on fundamental. We don't deal with those baby knowledge. So you must understand the instrument. So now let's imagine you decide to trade AUD USD. You have to pick AUD USD as the instrument you are trading. It automatically means that you are also trading NZD, GBP, and EUR. Why? Because they are positively correlated. They move the same way. They are all correlated. Because of this explanation I gave to you. So I see them move the same way. Because you understand this instrument, you know how it functions. Now, by the time we go deeper, we'll be talking about instruments and their time. That is when we now speak about time of the day, week, and month that this instrument function. For now, we are speaking about the main components that makes this instrument function, which is bidding and asking. So in essence, every currencies in the market, okay, yeah. Now, a base currency has its price. A quote currency has its price. That's where we are going to tomorrow. The base currency means one. That means one AUD USD. The quote currency is now the conversion of this USD to AUD. I don't want to talk about it. Let's move that one to tomorrow because I'm already speaking about price. Price is the unit of measurement for currencies. Price is the unit of measurement for the instrument. So I don't want to talk about price yet. Let's just focus on understanding the instrument. So without the instrument, there can never be business. There can never be transactions. There can never be bidding and asking. Bidding and asking is what causes the business. So you will need to re-listen. So tomorrow we'll dive deep into bidding and asking because the truth is, I explain this from your own perspective so that you can understand. Tomorrow, we are not expecting it from your perspective because you are not the one bidding, you are not the one asking. Yeah. A trader does not bid, a trader does not ask. It is the platform that offers you this because we are retail traders, so we trade on broker. So it is your broker that gives you bidding price and asking price. Then you auction. Your job as the trader is to auction. Ah, my God, there's a lot to explain tomorrow, guys. Tomorrow, you see this topic price. It is so vast. We might break it into two aspects. I don't even want to rush it because when we get to price, that is when, once we are done here, that's when we now go into the chart. This is what we introduce us to the candlestick, to chart explanation. You understand that? So we're going to stop here for today and we'll pick up from here tomorrow. I hope I've been able to speak a lot about instruments. And if I notice that there is nothing, there are some things I left out, yeah, definitely I will host a class in between our classes where I'll now explain those things as addition, okay? I'm human being after all, and I can never be perfect. I'll not be too perfect. So sometimes I'm gonna miss what I said I'm gonna teach you guys, but then I'm very sure it's just the minor stuff that I just feel like you should add to your understanding. So you need to watch this. Now, whatever these instruments do, and now I'm talking about this instrument as a pair now. Whatever they do, yeah, it is not their whatever they do here, whatever these instruments do, maybe they are large bidding for this instrument is what will reflect in price. Or when there's large asking, it's affecting price. Now, the funny thing is that price is now what even now determines if they should be bidding or they should be asking. So you see, it's a two-way, everything is connected. Let me explain it. So the instrument is what will determine price. At the same time, the instrument, at the same time, this same instrument, is needed for the business. Okay? So price is needed for the instrument to function. Everything just works together, bro. I'm telling you. But the truth is that by the time we are done with explaining everything, I will now show us where everything interlocked and our major focus, because we cannot be separating them. We need to find a central unit, a central portion, the middle. That thing that once we are focused, it can literally, help us ease the narration of these four things. And that's what we're going to speak. We'll be teaching in our coming class. Okay, so I think that will be all for tonight, guys. Please make sure that you pay attention to all these things that I've explained so far. I understand that the classes are usually very lengthy and it takes a whole lot of energy from me myself to teach them, and also from you that is also learning. Also, I know it's not very easy. You consume data and all these things, but trust me, you just have to give this thing a chance. Give it a chance. I mean, I'm making money from the market and I know how much ease have come into my life. There are some problems that are not supposed to even be money related at all. There are some problems that are not even supposed to sleep with you over to the next day. All you just need is a transfer. All that is all it takes. But then you fight, and the money that is giving you problem is in the account of someone, and the person does not even know what to do with it. So the question is, how do you take your own also? How do you get to that level whereby you have so much wealth, you amass so much wealth that you don't even know what to do with majority of this wealth? That is when knowledge comes into play. This is what the market business model presents to you. By the time we are done with all these teachings, you would see that you can literally analyze a chart without looking at the screen. I'm telling you the truth. We will try it out. Trust me, we will try it out. And we're going to make money from it. Because what we are trading is not chart. What we are trading is not, see, by the time you start trading MBM, what you are trading is not candles, it's not all this movement. This is what everything, all these things I've explained to you so far, those are the things you are trading. That's why the strength of the market business model to the trader is price. There are a lot of things I will unveil to you guys tomorrow. And tomorrow class, which would be our last class for the week. Okay, so that you guys can, pay attention. Hope you're taking note. If you have, Also, by the time we are done with, the fundamental understanding, this foundational building, I would be hosting a space on Twitter. Any day we are done, I'm going to tell us the dates for the space. Okay, so I'll be hosting a space on Twitter, and I would allow you guys to come on board to ask your questions from the classes so far. I'm going to answer everything, and hopefully, if YouTube permits, I'm going to put them here. And if it's not permitted, then it's going to be there on my Twitter page, on my Twitter account. Okay, so aside from that, guys, I wish you the best, and enjoy the rest of your night.